Welcome to Tuesday Tips. Today we are walking through how to maximize your qualifying income when purchasing a home if you're self-employed. First, let's take a look at three common misconceptions. Number one, if you get a 1099 from a company as an independent contractor, you're not an employee. You are technically self-employed. Number two, tax returns are not the only way to qualify for a mortgage loan. There are other programs out there that use bank statements or just a P&L or just a 1099. Now, one thing to remember with those types of programs is they do often require a little bit higher down payment, or they may come with higher interest rates, or both, since these ways of calculating income are not as conservative and bring a higher level of risk to the lender. And then misconception number three, a lender is not looking at the gross receipts of your business. They're looking at the amount of money you got to keep after your business expenses, because in most cases, those business expenses were necessary to generate that income. Now, there are a few items that can be added back in, and we'll talk about those specifics as we walk through the individual tax forms that you might use in the coming weeks. For now, though, the biggest recommendation that I have to maximize your qualifying income is to talk through it with your tax professional. Make sure they know that you're looking to finance a home in the next year or two. The primary goal for most tax professionals is to make your tax bill as low as possible. And the tax codes have a lot of gray area that tax professionals can take advantage of to keep your tax bill low. However, when you're getting ready to finance a home, it's not always a great idea to take advantage of each and every one of those loopholes. Oftentimes, paying a little more in taxes for a year or two can make the difference between getting into the home you really want versus the home you can afford, or that the lender thinks you can afford. So make sure to come back next week when we'll start going through the 1040 Schedule C and talking about which items count and which items don't, so that you can make sense of it all and know exactly where you're going to stand with the lender. And if you found this information to be helpful, please make sure to like and subscribe. Give me any comments that you have, and turn on any notifications so you don't miss future installments of Tuesday Tips. I'll see you soon and have a great day.